It's time for All Things Money with David Blain, a discussion about your money, including everything from investing and taxes to real estate. Now with this week's program from D.L. Blain Company in New Bern, here's David Blain.
Hello, I'm David Blain, and welcome to All Things Money. For the next 30 minutes, we'll take an educational, stimulating, and hopefully entertaining look at things relating to your money and finances. The show is about you and your money, so remember to send in your questions by email to allthingsmoney@dlblain.com or call us during normal business hours at 633-0107. We'd love to hear from you, and we'll try to get your question answered on a future show. And if we hear a lot of the same question, we may even do a whole segment on it. Well, today's show, we're going to talk about everybody's favorite topic, which is taxes. Almost the entire show is devoted today to taxes. It's that time of year. I know in our business we do our clients' taxes, and we've been hearing a lot of people very anxious about their taxes this year. It seems like after 2008, when things were so bad, maybe people's income were down and taxes weren't so bad. Well, we're seeing a resurgence this year of a lot of people owing a lot of money. And people becoming more and more concerned about taxes. We're seeing a lot of new taxes enacted, both at the federal, state, and local level. There are certain taxes that are scheduled to expire at the end of this year, and people are beginning to become very nervous about the tax burden of the average American in the U.S. So we're going to spend most of today's show talking about that. First topic we're going to touch on is how bad is the problem, and what are some of the typical tax rates that people are experiencing? Of course, you go to work every day and you earn an income, and there's income taxes, and then you come home and you have to buy something. There's sales taxes and Social Security tax and Medicare tax, and the number of taxes that are paid by the average person is mind-boggling. So we're just going to take a look at someone that has about a $60,000 annual salary. Really, that's very moderate amount, especially if you have husband and wife, let's say combined, married filing jointly. You fall into the tax bracket of the 15% federal tax bracket. And it's a fairly, we chose this bracket, it will encompass a lot of people. It's a fairly large bracket. We see that it encompasses people with taxable income between $16,700 and $67,900. And I think it would be fair to say that people would not consider someone in that tax bracket to be rich. And so the point of this is I want to illustrate how the average American is being overburdened with taxes. So we look at someone with taxable income of less than $67,000. Their federal income tax is 15%. Now, this is what we call a marginal rate. That means that every additional dollar that they make is taxed at 15%. If you look at their effective tax rate, it's probably in the 12 to 13% range. But when you're doing tax planning, you always plan at what's called the margin. So we're going to stick with that. The same taxpayer in North Carolina pays tax at the 7% rate. The 7% tax bracket in North Carolina runs from $12,750 up to $60,000 of taxable income. If your income goes above 60, you jump to 7.75. But we're going to stick people in the married filing joint under $60,000. Okay, so you've got 15% federal, 7% state. That's 22%. In addition, withdrawn from your pay, when you get paid, you're paying 6.2% Social Security tax and 1.45% Medicare tax. So far you've gone to work for 40 hours a week. At the end of the month, you get your paycheck. You've lost 15% to federal, 7% to state, and 7.45% to Social Security and Medicare. So you've already lost approximately 30% of your income. So if you make $10 an hour, your take home is only $7 an hour. That is a huge burden. You haven't even bought anything yet, and you've already paid 30% of your income just about in tax. Now, if you live here in Craven County and you want to go to the store and buy something, the sales tax rate is 7.75% now. Now, I realize that certain things like food and motor vehicles, they all have their special tax rate. And in fact, that's a topic of a whole nother show, is how can you possibly figure out how many taxes there are. But let's just say that on average it's 7.75% here in Craven County to purchase something. On top of that, if you happen to own property in Craven County and New Bern, you're going to pay another 1.12% of the value of your property every year in and year out. I hear people say, well, I paid off my home, I've got no mortgage. Well, unfortunately, with property taxes, you've got to keep paying those property taxes or the county can come in and take your home. So that's another 1.12%. In North Carolina, if you want to put gas in your car, the federal tax rate on gasoline is 18.4 cents a gallon. In North Carolina, which is one of the higher gas tax rates in the country, you're going to tack on another 30 cents per gallon for a total of 48 cents per gallon of gas goes to taxes. And so you can kind of see what I'm getting at. This doesn't count a lot of the business taxes that the business owner that pays you your salary, or maybe you are the business owner and you know full well that there's the unemployment tax that you pay, workers' comp, which is, although it's not a tax, it's required by law for you to get it. And there's business personal property tax, that the furniture and the computers and everything that you own in your business, a lot of people may not know this, but the county or city entity sends a tax bill to that business owner every year, and every year they have to pay the tax on that personal property. An individual does not, but a business does. Individuals, you also, if you own a boat, there's a lot of boaters here in New Bern, you're going to pay more tax on things like boats and your auto tax, personal property tax, things like that. And so you can see that if you add up all these things, by the time you pay your income tax and actually go out and purchase something, a good or a service that has another tax, you very rapidly can easily approach the 40 to 50% threshold. We didn't even talk about somebody that's self-employed. They have another 7.65% Social Security and Medicare. And so it's very easy for a self-employed person earning a moderate amount of money to very quickly reach 50% of their income that goes to taxes. And it's just simply too much. I could go on for hours and hours about this, but the tax burden is just tremendous. Well, that's going to take us to our first break. When we come back, I'm going to talk a little bit about some changes to some income tax policies for non-residents in North Carolina. So for All Things Money, this is David Blain, and we'll be right back in just a minute.